And on the local market, banks and miners led the charge today. Earlier I spoke to Ken Howard from RBS Morgans in Brisbane. Well, Ken Howard, a powerful rally, but are investors setting themselves up for a bit of a disappointment, do you think?
Let's hope not, Tiggy. I mean, it's been a relentless run of negative days on our market. It's good to see it up, over 3% in today's market. We've got to remember that nobody's going to ring the bell when you hit the bottom, and at some point you do have to start averaging into the market. There's a lot of value out there, but I guess as you're alluding to, those European issues are yet to be resolved. So we're still waiting for some guidance there, but good to see some positive news on our market.
Positive news, and some of these stocks' movements have been pretty spectacular. What's that telling us?
Look, it's certainly been a feature of the share market since the GFC and a feature of the market in the last couple of months that there's been a lot of short selling. We've seen some of the biggest names in the top 50 gapping down 3, 4, 5% in a day. So the rally today has seen some of those stocks reversing that trend. We had the likes of Aluka up over 10%, Macquarie Bank was up the best part of 10%, Incitec Pivot was up 9%. Really, that's telling me there's a bit of short covering going on in this market, and even some of those stocks outside the top 50, Linus Corporation's a good example. It's a $2 billion company, up 30% today, so there certainly has to be a degree of short covering that's driven today's rally, as well as longer-term investors looking for value.
Yeah, Linus is a very interesting company. Not every stock, though, was on the mend. CSL looks to have disappointed the market and indeed the medical profession with the news of the penicillin shortage there.
Yeah, look, I guess in today's market there was a bit of a switch out of the defensives into the growth stock. Most of the defensive stocks had a fairly lacklustre day. Your Woolworths, your Telstra, your AGL, your Macquarie Airports, we're lucky to be up 0.5%. So I think CSL is fitting in that defensive category. Certainly not good news that there's a shortage of penicillin, or a potential shortage of penicillin in Australia, but Australia is really a very small part of CSL's overall business, and I suspect it wasn't the major driver in the weak share price today, but rather that cycling out of defensive stocks into growth stocks in the current market.
Now, I see Goodman Fielder is to raise as much as $259 million in new capital.
Yes, that's right. It's a fully underwritten rights issue. I'm sure it's very disappointing for the suffering shareholders of Goodman Fielder that they need to stick their hands in their pocket one more time to try and see this company turn its prospects around. They do sell a couple of $1 billion worth of bread and butter. It should be a defensive business, but that hasn't been its track record. So a new CEO looking at a restructure and also looking at having to refinance $500 million next year is obviously opting to raise some capital earlier rather than later.
Ken Howard, thank you very much for joining us today.
Okay, thank you to you.